Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. It's a brand new week of fintech, and I'm here today as ever with Francis and Tom. How are you guys doing this week? We're all, of course, reunited on Monday for the first time in a while at IFGS.
Reunited, and it feels so good. It was good to be back at IFGS this year. It didn't feel like that long ago that we went to last year's one, and time flies. We were having fun. Feeling good today. The sun's out. I'm in a summer mood, and I think we've got some good topics to discuss today.
Fantastic. You definitely sound like you've got a pep in your step today. But Francis, how are you doing?
Yeah, I'm doing very well. It was great to see you guys earlier this week. IFGS was very fun indeed. There was a lot of good stuff announced there and a lot of really insightful conversations, and I think we're going to be talking about some of them today. So yeah, I'm looking forward to the podcast.
Epic stuff. And yeah, what are you guys going to be talking about today? Francis, what are you bringing to the table?
So today I'm going to be discussing N26 and how it has launched its new joint accounts to help customers build healthy financial habits together.
Lovely stuff. And Tom, how about you?
I am going to be discussing a new retail banking report from Endava, which kind of coincided with some of the comments that we heard at IFGS.
Fantastic stuff. And I am going to be talking about Project Nemo, a new disability inclusion that launched on Monday at IFGS. So all very exciting things. Francis, I'm going to let you go first.
Yeah, awesome. So, as I said, the topic of today's article is really sort of joint accounts and really building healthy financial habits together, which I think is a great initiative and something that, I mean, I've never had a joint account, but I can imagine that when you're really trying to sort things out, it can be kind of complicated to work out who's paying what, and if you're really sort of got your day-to-day lives going on and then trying to work out finances on top of things, I can imagine that it can really stack up and be stress that really just isn't needed. And I think when you see a fintech or a financial service sort of taking an initiative and sort of step in and say, look, we're going to make this easy for you, I think that's really good. So that is kind of what N26, the European Digital Bank, has done. They are enabling customers to manage their personal finances within the N26 app. So it explained that it hopes the move will reduce complexity and make it easier than ever to budget, track expenses, and achieve financial goals together. And it will be available to customers across 21 new markets, including Austria, Belgium, Denmark, Greece, Ireland, Lithuania, the Netherlands, Norway, Poland, Slovakia, Slovenia, Spain, and Switzerland, to name a few. And customers of the digital bank in these markets with accounts across all personal membership tiers, including the free N26 standard, can now create a joint account with just a few taps. The feature enables users to filter expense information by participant and keep track of the joint monthly budget, promoting healthy financial habits, smart insights, and full legal ownership for both participants. Offer added safety and transparency. Again, I want to note, it is only for two people that can have the joint account. There isn't like a family type of thing for it. It really is only for partners. But it seems very simple, but in my opinion, it's sort of that thing that we always talk about, that fintechs don't need to be overly complicated. They can just sort of tackle really simple day-to-day struggles and make them easier. And I think this is what it really is doing. And I especially like the idea or the theme that they've really picked out, which is creating healthy financial habits. I mean, I for one know that, again, although it's not a joint account, is that I have had unhealthy financial habits of spending money a little bit recklessly sometimes and sort of losing track of what a good budget would be, sort of going over sort of 2 weeks in the space of 2 days, for example. Not that still happens a lot. I'm not saying that is a regular occurrence, but it has happened before. And that sort of thing, I think, can really be alleviated and sort of prevented if you have like almost just a little push from your financial services provider. So I really wanted to reach out or speak to you guys really about it and see if you agreed, if that the idea of, if the theme is something that really stuck out to you guys as it did to me, or if this is something that, you know, you'd almost expect your bank or financial service provider to really provide, I suppose. Like, is this as cool as I think it is, or is this sort of just a what's to be expected? Tom, I'll come to you first.
I hate to be a party pooper, but honestly, I feel like when you were talking about it, when we initially looked at the news on the website, it did feel a bit like, oh, this is something that's offered by as far as I'm aware, all the sort of main incumbent banks that we often talk about and it has been offered for a long, long time. You know, I can open a joint account at Barclays or NatWest, I think anyway, without any issues. So I think what kind of struck me was just, this is a case of maybe the sort of fintechs and digital banks catching up in areas where maybe they weren't initially focused in areas they weren't initially prioritizing. And obviously the more features that digital banks can offer, the easier it's going to be for them to capture customers away from the sort of incumbent banks in the UK. But yeah, to be honest, I don't think it's a new and exciting concept. It's a concept that's been around for quite a long time, and yeah, all in all, I think it's just a nice little launch for a fintech to catch up, rather than it being the other way around.
For the record, I'm not saying this is like a crazy new innovation. I am well aware that joint accounts have been around for the longest of times. I'm not saying that. I just think it is quite cool, this idea of, you know, sometimes people say, oh, we'll do a joint account because it's like, oh, we'll put all the money in one place. But then that's sort of where it ends. Whereas the way that I've interpreted it, at least, the drive from N26 is this healthy financial habits thing. And I think that is sort of the next step that I'm referring to, really, which is not just leaving it as we've merged our accounts and full stop, end of story. It's we're going to continue to take these budgeting systems forward and making sure that everyone is, or the partners, I suppose, are making the best decisions for them. It's creating a fair financial experience for the two people involved. And I think that's what I'm thinking is the cool part about this. But again, Polly, do you agree or disagree? Are you more with Tom that this is just bit same old, which I will say I do see that side of it. I'm not saying it's crazy revolutionary, but I do think it's quite cool nonetheless.
I mean, after that brutal smackdown from Tom, I actually thought, I'm with you, Francis. Okay, so let's forget about Tom. We don't need to know. So I think actually from like a couple of fronts. So like, yes, I agree with Tom in that this isn't necessarily anything new. You know, I mean, it's not groundbreaking, it's not innovative, it's a joint account. But one of the things that Tom said, to throw your words back at you, you were like, this is an example of a challenger bank catching up to the incumbents, and that is exactly what it is. And that's why it's interesting, and that's why it's cool, because when you start off as a challenger bank, a neobank, whatever it is you want to call them, you know, I think the way to succeed is you focus on one thing and you do that one thing really, really well. You know, obviously there are 100 different kinds of financial services as a bank you can offer. You know, you can offer current accounts, saving accounts, all sorts of different kinds of accounts, and you've got other products like insurance and credit and blah blah blah. But when challenger banks and new banks have done well, it's when they've offered one thing and they've focused on one thing, and they're going to do that one thing really, really, really well, and then they're going to look at other things. So an example is like Starling kind of started because they wanted to make just really good current accounts. Like that was the whole thing. They wanted to make a current account that was the best current account. And once they kind of were happy with where their current accounts were, then they moved on to other things. And I think that's kind of a key here. Like you can't expect a neobank to do everything first. Like it doesn't take, they don't have the time, they don't have the resources, they don't have the money. So the fact that N26 is now being able to offer a joint account goes to show you that they are doing really well, and they are getting to a place where they are catching up to these incumbent banks, and they are showing that they are there and they are here within the financial services industry, and they are ready to, you know, take things on. And I think that's the key thing we should be focusing on here. I think also going back to what you're saying, Francis, about the focus of building healthy financial habits, I think that's really important as well. And especially when you think of the kind of people that would use a joint account. So realistically, we're looking at like couples, families, or like roommates or flatmates, whatever you want to call them. That's kind of realistically where we're looking at in terms of joint accounts here, because opening a joint account with a person is quite a big thing because it does affect kind of your finances and your credit and stuff like that. So if you're sharing finances in that way, obviously it's going to be quite a serious situation. And I think it's so important that everyone knows kind of what they're doing in terms of financial habits. And it's something that I've had to kind of learn the hard way, like you, Francis. I've made some questionable financial decisions in my life. Let's not go into them now. But then obviously, like, when I started going out with my now husband, like, it was like, right, we need to figure out how we're going to do money, how are we going to pay for things. And that was a joint account. And even now, like, with my sister, my younger sister practically lives with me now, basically. She's here enough. That sounded really sassy. But so you see, I hang out with her a lot. So we've opened a joint account now because the amount of times that we're just sending the same 20 quid back to each other has just gotten out of hand. So I think it may not be revolutionary. It may not be super innovative. It may not, be completely 100% breaking news, even though obviously we put it as a news story. But I think it goes to show you it's just another example of challenger banks kind of doing their thing and getting a foot in the door of the finance industry. Like, this is them doing everything that they say they're going to do, which is catching up the big banks. So actually, I'm with you, Francis. I think it's cool.
Any response to that, Tom?
No, I don't disagree with your points at all. And I think obviously it's a good case for, as you said, the challenger banks ensuring that they catch up in these positions and do branch out as much as they can. But yeah, I'm not in the camp of this is hugely exciting, and hopefully there's more exciting things to come.
Well, I think it's still cool nonetheless. But on the topic of exciting things, why don't we move on to Polly's article?
Absolutely. What a smooth segue that was. I love it. So yeah, what I want to talk about today does go back to IFGS on Monday, and Project Nemo launched at IFGS. So Project Nemo is a new disability inclusion initiative within the fintech industry, led by Joe Dewar, who previously of GPS/Thread CEO, and just generally she's been in the fintech and payments world for a very long time. She's moved on now to spearheading Project Nemo, and essentially this is all about promoting people with disabilities within the fintech industry and trying to make things better for everyone. So more than 20% of the UK population lives with a disability, which has an estimated spending power of £274 billion annually. However, there is a lack of disability representation in UK fintech employment across the board, and therefore there is kind of a lack of accessible services across the board, because if you don't have the people with those certain disabilities in your employment, how could you be sure that you're making the services for those people? So Project Nemo is here to go on a year-long mission to challenge disability inclusion within the fintech sector and investigate the profound and lasting change through three key approaches, which is essentially education, empowerment, and showcasing. So I think this is an absolutely fantastic thing to happen. I have kind of been vaguely involved with Project Nemo for a little while, and by vaguely involved, I mean I've spoken to Joe about it before the launch, and I've sat in a couple of meetings, and it is all just what they are planning to do is phenomenal. And already, like I was speaking to Joe the other day, the response to the launch on Monday has just been exceptional, and everyone wants to get involved, which is exactly what you need to see. And I guess I wanted to talk to you guys about it today, because obviously we talk a lot about financial inclusion and things like that, but then to have such a big program of pushing for this inclusion in a year, it's a very ambitious project, I guess, but something that I think will definitely happen because it feels like the right time for it. And Project Nemo is here to create sort of a lasting legacy of progress over the next year. So I just thought it was a really important thing to highlight. And I guess my question to you guys is, how can we, foster this sort of inclusion and accessibility? Obviously, Project Nemo are here. They're going to be doing a festival of inclusion, which is events and workshops, which is going to be leading to like a podcast and ebook on terms of like actually making people aware of the different types of disability and like accessibility needs and things like that. But where else do you think fintech needs to be focusing on in order to boost this inclusion? What do you think needs to be done? I mean, Francis, we'll go to you first.
I think that's a tough question because I think it's at every stage. I think when you look at employment, when you look at board representation, and when you look at sort of customer accessibility, I think all three of those are equally as important. I mean, you might argue that, you need the board to have that representation in order to really have an impact. But then at the end of the day, if the customers are still being excluded, I mean, I think it's insane that there was that stat from the article, which was 274 billion annually, which is crazy in my opinion, that, there's that much sort of real exclusion. And yeah, like I said, I think it really is, all three aspects are equally as important. And I don't think organizations can really sacrifice one or the other to sort of achieve perhaps one of the other ones. I think they are really, the same, or they hold the same sort of value. And I think one of the important things from Project Nemo was there were three main takeaways from it, really, which were education, empowering, and showcasing. And for me, reading about sort of what those really mean, empowering was connecting fintech business leaders, allies, advocates, and those with lived experiences to a toolkit of resources and expertise that will enable them to build inclusive workplaces, products, and services. And that creates that community feeling of everyone is helping no matter what part of the transaction cycle they're at. And I think that is where, again, we always talk about sort of fintechs and how they differ from incumbents. And I think fintechs can really create a community feeling. I think they have that power because they do often take these niche, I suppose, sort of angles. And I think the more that organizations really sort of take a step back and think, right, how can we tackle this, or not suppose tackle, but how can we take a stance and show that we're taking part. And I think that's what Project Nemo really is going to be doing, is sort of highlighting and bringing to light how important that is and how firms can achieve that. It unfortunately it is going to be a time will only tell for the time being, but I think it's going to be incredibly impactful and hopefully see that 20% of people with disabilities really see a more inclusive or feel more included when they're trying to do their finances.
Yeah, absolutely. I think one of the great things about Project Nemo, just it feels like something that should have happened maybe a while ago, but is happening now, and that's great. And obviously, it's a really good year for it because we've got the Olympics and the Paralympics coming up. So I think, obviously for 2 weeks during the Paralympics, people start caring about disability. So it's a great time to start putting the work in. And I think, speaking to everyone who's been involved with the project so far, it's just come from such a place of passion and genuine care that I truly believe that things will happen and things will happen fast, especially if you look at just the crazy amount of response and great things that have come out over even just the past couple of days since the launch. And I think as well, what's really great is it's one of those things that I think when it comes to disability and inclusion, it's something that you don't think about unless it affects you. So unless you have a disability, or someone like a family member or a friend with a disability, you don't actually think about it because, why would you? Because it's never affected you in that way. So to have a project really highlighting it within the fintech community, I think it'll be a great way to, once we have this success within the fintech community, there's no reason why we can expand over into other industries as well. But I mean, Tom, what do you think about this?
I think what you just said there was very similar to what I was about to say, is that I really, really like the initiative first and foremost. And something that struck me a lot of the times is when we talk about improving accessibility in financial services, is often, when it's a bit more of a niche introduction to help a small number of people, often it occurs to me that, I wasn't even aware that this was an issue that people faced. Like you said, and if it's not something that you face or someone close to you faces, you are often unaware of the issues completely. So I think the importance of showcasing these different issues and ensuring that there is this diverse workforce, whether it be just lower level employment or at the board level. It's really important to ensure we have this inclusivity to highlight the amount of issues that people face on a day-to-day basis, and really draw light to as many of them as we can to try and advance accessibility and inclusion in financial services. So yeah, I think the Project Nemo is going about it in exactly the right way. It seems to have exactly the right ideas, and hopefully it really can have a driving force in the next year, as it hopes to. And yeah, I really like the idea. And I think, like I said, it's just a case of education is a huge aspect for all aspects of finance. And this is just another one where the more people that are aware of these issues, even if they don't know anyone that has to deal with them, it's going to lead to, just greater innovation in those areas and hopefully ease those areas of issues for people across the UK.
Yeah, amazing stuff. And it's something that I just really wanted to highlight today because I think we need to obviously get the conversation going as much as possible. And I look forward to, hopefully maybe talking about what the project gets up to a little more as time goes on, because they really have some fantastic stuff planned. But anyway, let's finish off by going to you, Tom. What's your article today?
Well, yes, so I'm going to be dipping back into some of what we heard at Innovate Finance. And essentially, the article that I'm going to be talking about today is revolving around a new retail banking report by Endava, which found that 75% of firms are struggling to implement new payment systems as a result of their outdated core systems. Now, the report also highlights challenges in implementing updated cybersecurity measures. Firms are trying to keep up with digital demands by turning to the cloud. However, many have expressed concerns about implementing, scaling, and managing the tech. So, Fred Fuller, who's the global head of banking at Endava, explained that the reality is that new features and functionality are usually built on old systems, which massively limits financial institutions' scope for innovation. And the main reason I wanted to draw attention to this article and idea specifically is because, while we were listening to various panels and talks at IFGS earlier this week, the concept of innovation and cybersecurity came up, obviously a lot. I heard a lot about the potential of digital IDs to help stop fraud and make customer journeys more seamless. But we still are at a time where, these digital IDs, although it's spoken a lot at different events and people are trying to work on new ideas to implement it, it isn't really mainstream in any sense. We don't come across it on a regular basis, if at all. And when it comes to cybersecurity, techniques like multi-factor authentication still remain the best way to keep customers safe, even though that's been the way for many, many years. And we haven't seen much innovation actually come to the forefront in those areas. And one panel and one speaker, John Penrose, the Conservative MP for Weston-super-Mare, that I found interesting was when he was discussing the DPDI bill. And he was explaining that he basically hopes this bill is going to help take the first steps to take what has worked so well so far in open banking and essentially clone that and roll it out across multiple other sectors across the UK. So, implementing open energy data, open water data, open health data, etc., etc. And yet, even he, a member of Parliament, seems to wish that the bill would move through Parliament quicker. And I know often we've spoken about, how financial services is slow moving, and that can be a bit disappointing at times. And he made it clear that it's still far from certain, despite the bill, that we're definitely going to take advantage of our current leading position when it comes to open data. So really what I wanted to ask you guys and discuss is, why do you think the financial world seems to have so many innovative ideas in all aspects of, payments, banking, open data, cybersecurity, and so on and so on? Yet everything's, it feels to me like it remains slow moving. Do you think it's like Endava says, is it legacy systems getting in the way of implementing new tech? Is it a case of slow government action? Or do you think I'm just being impatient and things actually are moving relatively quickly? Polly, what do you think?
I think it's a mixture of a lot of different factors, to be honest with you. I think the legacy tech really is obviously quite a big issue, especially when you think, some of these larger incumbent banks have been going for a very long time. So obviously they've been through quite a lot of like tech changes and updates. If you think about sort of, even the last 20 or 30 years before all this like fintech stuff. And I think it's fair that firms are struggling with new systems and like they're struggling to update their systems. However, I don't think that should be a good excuse to not doing it. And maybe that's a little bit harsh to say, because obviously what do I know about implementing new technology in a bank or anything like that, which is very little. But I think, when you're thinking about your consumers, you're thinking about your customers, you need to be able to keep them safe. That's kind of like number one. And especially with cybersecurity being such a big issue at the moment, that you have to be able to keep them safe and you have to be able to keep their money safe. That's kind of literally the kind of be all end all, realistically, and that's not even thinking about the idea of sort of consumer loyalty and consumer trust. That's almost like a completely separate thing entirely, but that still factors in here. Like, your consumers have to want to bank with you, want to use your services, otherwise they're just going to go somewhere else. We have a really competitive market at the moment with all the fintechs coming on board, obviously, and even, if we just look at incumbent banks, there's a very competitive market of banks and financial services providers out there. So if you're not doing the bare minimum, then your customers are going to go somewhere else. And that's just kind of like, it sucks, but that's just the way it is. And I think, having a good user experience, strong data management practices, good technology, that is the key here. And I think, you've really got to get moving. And I think a lot of ways as well, sometimes it can be maybe fear of change. No one likes change. Everyone likes things to stay exactly the way they are. And especially when I think of these big organizations, they're going to want to stay the same. We call them traditional banks or traditional organizations for a reason, because, they are steeped in tradition and they like doing things the way they've always done them. But obviously you can't do that in this sort of digitally native, data-led world. You have to keep up with what's going on. And I think all this legacy tech and all this sort of, government shuffling, perhaps, it all just ties into a case of they need to do better and they really need to get on it and do the best they can. I'm not saying it's easy, but you just have to do it. There's no, I don't think there's any other choice, realistically.
Yeah, I completely agree. And I think one of the areas that we speak about so often in the podcast, and I feel like I bring it up a lot, is this innovation does exist, and we're seeing so much exciting new technology and so many new ideas come to the forefront, especially at these events where people are showcasing sort of the different evolutions of their company and products and services. And yet, when it comes to day-to-day finances, it feels like we see very slow advancement in many areas. And yeah, I think obviously there are so many factors, like you mentioned, that are, playing a part in that. But yeah, it really does feel like at times we don't necessarily make the most of the innovation that we do see. And especially when it comes to, government, you just want to see them back innovation in areas like John Penrose was saying, in that, we could be position ourselves as a leader for open data in all these different sectors. And yet the case might be that we might end up just being too slow about it. And other countries are catching up rapidly. And we need to really focus now in the next year on ensuring we have this position locked in as a leader. And yet the case might be that we might sit here in a year's time and say, oh, we missed our opportunity. And now other countries across Europe and Asia have actually overtaken us. And at that point, it's very difficult for us to catch up again. So I think it's a really important area to discuss. And, in many cases, I feel like we might just be a little bit disappointed by the speed that things continue. But Francis, I'm interested to hear your take on this as well.
I'll try and keep it brief because I feel like you guys have already made a variety of really, really good points. But something that Polly said that stuck out was a lot of people are sort of against change. And I think it really is an attitude of, you were saying, why are things so slow? Is many people think, well, if it ain't broke, don't fix it. And I think that is a very sort of almost counterintuitive attitude to take. It's very sort of uninspiring just to be like, well, it's the status quo, it works. And I feel like that really goes against the whole idea of that, people are coming up with these ideas, but if no one's implementing them because for whatever reason, and I think the interesting thing actually talking about the reasonings is why some people have said that they haven't introduced cloud technology. Competing technical priorities, a lack of technical resources to manage it, fraud security concerns. In my opinion, all those are very valid. The one that I thought was just an awful excuse is a fear of long implementation. I think that's a terrible excuse not to do something. And the fact that 32% of firms said that's the reason they're not implementing cloud technology, I think is a little bit bizarre, to be honest, because I think it's about staying ahead of the curve, really. That's how organizations can really flourish. And I think if you're taking this attitude of, I don't need to do it, it still works fine the way it is, but this thing would take ages to do, it would massively accelerate things and mean that resources would be freed up elsewhere. but why do we need to do it? I think that is a very poor attitude to have, and I think that is definitely something that perhaps it really goes sort of to the top, and it's sort of with the C-suite and the attitudes that they have, and sort of the longevity that they really see their organizations having. But I think when a fear of long implementation, I think, isn't a good excuse to explain why things are slow. I think you've really got to sort of take the bull by the horns, right, and sort of go with it. But if they're not going to, that's poor on their behalf.
Yeah, I see your point there, and I think it's something I realize I've seen a lot about at different events as well. Is a lot of these incumbent banks are in the middle of their sort of modernization journey and trying to update their technology, and they are implementing new technologies, but a lot of them do draw attention to the fact that it does take a long time, and the longer that process is drawn out for, the more problems that can arise. I know I can't remember which bank it was actually, but I remember one of the banks basically explained that they were having to run two banks in parallel, and that was the kind of one built on legacy technology and the one that they were building on new digital cloud-based systems. And the fact that they were basically having to use twice as many resources to operate two different sort of banks in parallel as they sort of began the transition. And for that reason, I can see sort of an issue why these banks are having doubts about jumping straight into this journey, because it could cause many issues for them. But I'm thinking, once again, it's just a case of let's see what happens in the future.
Just quickly, but on that, I don't think there's ever going to be a point where we have a finished infrastructure where people can be like, all right, this is going to be the new legacy tech. The way technology is developing these days is that there's always going to be the next big thing. So waiting to be like, all right, well, we don't want to implement this yet because we know it's going to expire soon. I don't think that, again, that is the right attitude to have, because in the world that we live in, everything's always evolving and always innovating very quickly. And I think you need to sort of just, again, like I said, really have a head, go for it, and sort of take an initiative and really try and make a change.
Yeah, I really like that point. I think that's the idea that we need to take from this, is that ultimately what we really all want to see as consumers and as journalists in fintech, we want to see more innovation. We want to see people, jumping straight into it and getting involved in innovation and driving innovation in every respect. And that's the only way that we're really going to see the changes that everyone wants to see across finance. And with that in mind, I think let's put a stop to this discussion and move on to our final segment.
Lovely stuff. So if you want to hear anything more about anything we've talked about today, head on over to thefintechtimes.com. Plenty more news and insights over there. But what I learned this week is up next. So each week we are learning so much new stuff, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So Francis, what have you learned this week?
Felt like it was appropriate that what I learned this week was from IFGS. So Oliver Scott, the head of Samsung Wallet at Samsung, explained in a panel about sort of the evolution of digital wallets, that the importance of data, and how normally when we talk about data, people are very, very scared about how their data is being used. But he actually points out that data is something that people are willing to trade. And that idea of people sort of giving up privacy for personalization, I thought was really interesting, and definitely a topic that has sort of stuck with me since the event.
Fantastic. And Tom, what have you learned this week?
This week, I feel like we've seen quite a lot of sort of fintech for good-esque stories. Project Nemo, obviously, is one of them. And another one that stuck out to me is that Klarna has partnered with Milky Wire, which is an environmental impact platform, to launch a new fund open to tech and finance companies looking to invest directly in impactful products and projects to contribute to global biodiversity targets, but don't know where to start. And I just thought that was a really nice little initiative.
Amazing stuff. And then what I learned this week was actually from a podcast that I recorded this morning all about embedded finance. And one of my guests was Tamara Kostova, CEO of Velexa, who was talking about how one of the next kind of iterations of embedded finance will be embedded wealth and embedded investing solutions. And I just thought that was really interesting and something I had not really considered before. But anyway, thank you so much, guys, for joining me today. It has been a pleasure, as always, to talk about fintech with you. And hopefully we can get the gang back together at another event very soon, since we're pretty much in event season now. But anyway, guys, thanks again, and I'll catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using hashtag TFT News and Views and follow us at the Fintech Times.